Now let's try to understand the performance obligation which is satisfied at a point of time instead of a period of time. Let's try to take the example of again Apple iPhone. Now the Apple iPhone, and company sells iPhone to a customer for $1200. Now at that point of time, customer got the legal title for the phone. Apple has transferred its physical possession to the customer. The customer is now having all the risk and rewards. He can use the phone, and if the phone is stolen or broken after certain mistake of the customer himself, then it's the customer's own risk and rewards. And finally, customer has accepted the iPhone and he has now obligation to pay or right to pay, whatever we say. So in that case, the Apple company will recognize the revenue at the moment customer takes the possession of the goods or possession of the phone, because now the phone is with his control. Let's take another example of company which name is Horizon Homes. Now Horizon Homes is building multi-units residential complex, and the company is entered into a contract for specific unit under consideration. Then what we can say, that contract terms are like that customer pays the deposit which is refundable if Horizon does not complete the unit as agreed, and remaining purchase price is due when the unit is complete. So when the flat will be completed, the remaining price will be paid to the builder. If the customer defaults before completion, Horizon Homes can only keep the deposit. In that case, the company can keep the deposit only and only if there is a default. Now question is, we need to determine when the revenue should be recognized, over a period of time or on a point of time. So we can say the performance obligation is satisfied at a point of time. Why? Because customer obtains the control of unit only upon completion. He is getting the control only upon completion, not during the period. And Horizon Home does not have a right to full payment for work performed before completion. The company Horizon Home won't be receiving any payment before the completion of entire flat, and the risk and rewards gets transferred when the unit is completed and that is accepted. So here you need to be very cautious that the contractual terms determine whether it will be the period of time or point of time. So if the customer pays the deposit which is refundable, remaining purchase price is due, and Horizon Homes can only keep the deposit if the customer defaults. So all these things are showing that this is a point of time thing which you need to take into your account. Now let's see its textbook definition. So it simply says revenue will be recognized at a point of time if revenue is not recognized over the period of time, or customer obtains the control, and the control simply means customer has to pay, an entity has the right to receive the payment. In the case of iPhone, the customer had to pay and the Apple company will be receiving the payment. Customer got the legal ownership of the phone, and physically he has received if some assets or goods is transferred, and all the risk and rewards are with the customer. Now if the phone lost, then the customer will be bearing that loss, and finally he accept the assets. So acceptance and receiving are generally the same point which we try to understand here.